Hi guys, my name is Pelumi Solaru and welcome to my channel How to Invest for Income. Now today I'm doing a stock review because I want to teach you how I review stocks. Now the company I'm reviewing today is Vodaphone, so check it out. So before we get started, please do subscribe to my channel and also please do click that like button so that you get my stock review videos as soon as they drop. Also, please also comment in the video below, especially if there's any companies you would like me to do a review on. So I will then add them to my list and hopefully I'll get a video out on that company shortly. So this is a financial chart that shows Vodaphone's financial performance over the past couple of years, 11 years to be exact. So the column on the left is their sales, the column on the right is their share price, and underneath is the years. The blue line is their sales, the red line is their EBIT, which is earnings before interest and tax, pretty much profit. And then the dashed line is their share price. So one of the first things you notice when looking at this chart is that Vodafone's performance has been quite static. And by that, what I mean is that their sales have never really been growing. They've been just static. So in the past, they were growing their sales, but over recent years, they've never really sort of broken out of that sort of threshold of growth in sales. So they've not been growing. So what you kind of want is you want a company that's doing that, not a company that's maintaining. So that's a bit of a concern because to certain investors, a company that's not growing is similar to a company that's losing money, because what's going to happen is over time and over a period, if they're not growing their sales, that exposes them. There's a lot of people taking their market share, so it puts them at quite risk. So although they're profitable, the lack of sales is quite concerning. The lack of growth in sales is quite concerning. Like I mentioned, you want that in terms of companies when you're looking at companies when it comes to growth in sales. But a maintenance isn't really an ideal. So they really need to break out that bubble. It's technology in that industry moves so quickly and so rapidly. So as soon as you install something, new technology comes that requires you to have to install that new technology, and you're always kind of in a perpetual cycle of having to replace and repair and update equipment, especially when your operation spans so many different countries. It's very difficult and very expensive. For example, they have to spend on average 57% of their cash just to maintain and repair their equipment and their infrastructure, which is a shed load of money to have to reinvest back into the business, which they could be using to invest in other opportunities or sell for sales growth and profitability. So the company is in quite a challenging market, and I think that doesn't help either, which is why we can see that their performance has been quite static over the past couple of years. Another thing about Vodafone is that they have quite a large amount of debt. Now, this debt has grown recently because of recent acquisitions that they've made. However, the debt in relation to assets is getting to a level which just requires a bit more thought if deciding to take that leap when it comes to an investment perspective. However, they are able to comfortably cover their debt based on the profits and the cash that they generate from the business. However, if sales do drop, that may become a challenge. And based on how their sales are looking, that's something just to bear in mind. There are a number of good things that Vodafone are trying to do. For example, they are trying to streamline and make their business more efficient. And they've done that through introducing a new customer online platform that allows them to be able to sell their services directly to customers more effectively and efficiently. They're also trying to utilize their assets more. For example, you can see that they've got about a return on capital employed of about 3 to 4%. So what that tells me, they're only using about 3 or 4% of their assets in relation to their sales. Now, that's quite a concern. So they're actually trying to improve that by utilizing more of their assets, by renting out and leasing it out to other organizations. So that would help boost sales, and it will also help boost the profitability and cash generation of the business. So they're taking effective measures to try and tackle these problems. So onto the share price. One of the things you'll notice is when looking at this chart is that, let's say 11, 10 years ago, Vodafone's share price was an uptrend. And it's kind of plateaued for the past 4 or 5 years. And it's kind of been on a slow trajectory downwards. Now, I'm not surprised by that. The reason why, personally, is because they're just not growing. Their sales are not growing. They've been static. They've kind of been on a slow decline downwards if you look at the overall average trend. And so a lot of the share price reflects the future profitability and growth of the business. And if investors don't see that this company is going to be growing, there's not going to be that much demand for the shares, and people are going to want to sell to make sure that they don't make a loss. And we can see that in the share price, which I believe has even dropped off since I created this video. So hopefully things do change. If their sales do increase and grow in the future, then you should see that hopefully reflecting in the share price. But at this moment, I think there's a lot of sentiment around the future profitability or growth of this business, which is why we're seeing the share price kind of drop in the near term. However, the drop in share price does provide an opportunity for people that are looking for income. Because their share price is quite low, they've got a yield of around 8%. So investors that are looking for income, that are not really bothered about the future profitability or growth in sales of the business, may look at Vodafone as an opportunity. However, that's from the eyes of the income investor, if that's something that they want to do. But they must bear in mind what the future prospects of the business when taking that leap. To summarize, my thoughts on Vodafone is that they're not really a company that's growing, but a company that's just bobbing along. And I believe that competition in the market is one of the reasons why. I also believe that the capital intensive nature of the industry that they're in is also another reason why they may be struggling to grow their sales, because this is sucking all the life out of the business, which they can be using in terms of cash, which they can be using to reinvest in other areas, other sales opportunities for growth. However, I do like what the company is doing with regards to sort of trying to streamline the business to make it more efficient, and to also look at ways to utilize the assets, because they've got a large amount of assets and they should be utilizing them more effectively. So I absolutely agree with that approach. However, overall sort of opinion of the market is that the future prospects of the business isn't so bright, especially due to recent drop in the share price and also impact of COVID. However, hopefully things do change in the future and they do look at more radical ways of generating sales, or look at going into more innovative and challenging markets, which hopefully boost profitability and sales of the business. So out of a 1 for me being a no-go, or a 10 being an absolute banger, I'll give Vodafone a 3 out of 10. Now, some people may think that's a bit harsh, but my concern is that the company's just not growing. And to me, a growing company is not a good company. It's a company that's going to lose money in the future. Hopefully things do change. I'm not one to try and predict the future. All I can go off is my opinion. But all I'm just concerned about, the main thing I'm really concerned about is lack of growth, lack of sales opportunities. And I'm hoping that management do more effective ways of trying to utilize their assets and also grow their sales by looking at going into innovative areas, or looking at venturing into new technologies or fields to bring more sales into the business. So for that reason, that's why I gave Vodafone a 3 out of 10. Well guys, I hope you like my video. If you did like my video, please do like and subscribe. So as soon as I post a new video, you get it as soon as it drops. Also, please do comment in the commentary below if there's any specific companies that you'd like me to do a review on, or just your general thoughts on the video. I'll hopefully get around to them eventually. A lot of people have asked me to do reviews on quite a few companies, so it's going to take some time. But please do add it, and as soon as I get the chance, I will do a video on it. Anyway, chat to you guys later. Bye.